In July 2025, BlackRock discovered it had been defrauded of over $500 million through fake invoices, fake emails, and fake contracts that had been running for nearly 5 years. The money vanished into offshore accounts in India and Mauritius, and almost nobody heard about it. But this isn't a story about one clever fraudster. It's a story about a pattern that has repeated across Madoff, Enron, Lehman Brothers, and now BlackRock. A pattern that has drained over $65 billion from Madoff's victims alone, over $74 billion from Enron, and trillions more across a system that seems designed to let this happen again and again. So the real question isn't how BlackRock got scammed. The real question is, why does the same $500 million fraud keep happening in different forms, decade after decade? And why does it take years to catch it every single time? Because the system that let this happen is the same system holding your savings, your mortgage, your retirement. This is about the architecture of deception built into modern finance. It's about how trust becomes a weapon, how complexity becomes a shield, and how by the time anyone notices, the money is already gone. The BlackRock fraud had been running since at least September 2020. That's nearly 5 years. 5 years of fake invoices. 5 years of fabricated customer emails. 5 years of audits by Deloitte and CBIs that somehow missed the fact that every single piece of collateral was fiction. The loan grew from $385 million to over $500 million, and nobody caught it until one employee noticed something off about an email address. One of the largest investment firms in the world, managing $179 billion in assets, was bleeding $500 million for 5 years. Because of fake email domains, major accounting firms conducted annual audits, and it all sailed through until someone got suspicious about a typo. Bankim Brahmpot created an entire shadow infrastructure, fake websites, fraudulent contracts, fake customer invoices designed to look like they came from legitimate telecom companies. He used these fictitious receivables as collateral to secure massive loans, then quietly transferred the real assets to offshore accounts. When confronted, he stopped answering calls. The lawsuit was filed in August 2025, but the money, it's gone. This isn't new. This is the same playbook that has been used for decades. Bernie Madoff ran the largest Ponzi scheme in history for 17 years. From 1991 to 2008, he defrauded investors of $65 billion. He was the former chairman of NASDAQ, a respected hedge fund manager, and the whole thing was fiction. The SEC received multiple red flags and failed to investigate. When the financial crisis hit in 2008, the scheme collapsed. He got a 150-year sentence, but the money was gone. Enron, $74 billion in fraudulent accounting from 1985 to 2001. When it collapsed, and thousands lost their jobs and pensions. The executives walked away with millions. Lehman Brothers hid over $50 billion in loans disguised as sales. When they filed for bankruptcy in September 2008, it triggered a global financial crisis. Millions lost their homes, jobs, and savings. The executives had already cashed out. WorldCom, $11 billion inflated from 1999 to 2002. Over 30,000 people lost their jobs. Investors lost over $180 billion. The money was gone. Do you see the pattern yet? Every single one of these frauds followed the same sequence. Let me break it down. Stage 1. Build trust. The fraudster isn't some shadowy criminal. They're respected. They have credentials. Trust is the foundation. Stage 2. Create complexity. The scheme is wrapped in layers of financial engineering, offshore accounts, special purpose entities. Complexity makes the fraud hard to detect, and it makes anyone who questions it feel stupid. Stage 3. Exploit gatekeepers. Auditors and regulators are supposed to be safeguards, but they fail. The gatekeepers either miss it or look the other way. Stage 4. Scale the fraud. Once running, it grows. The fraudster needs more money coming in to keep paying returns. The system becomes a treadmill. Stage 5. Transfer and hide assets. The money gets moved offshore accounts, shell companies. By the time anyone notices, the assets are in jurisdictions that don't cooperate. The money is gone before the fraud is even discovered. Stage 6. Discovery and collapse. Something breaks. An employee notices a typo. A crisis forces withdrawals. The discovery is almost always accidental. Stage 7. Prosecution and loss. The fraudster gets caught and sentenced. But the money? It's gone. Victims recover 4% on average. 4%. This is the pattern. 7 stages. It has repeated across decades, across continents, across different asset classes. Consider the scale of fraud in 2024 alone. consumers worldwide lost $1.03 trillion to scams. In the United States, consumers reported over $12.5 billion in fraud losses in 2024, a 25% increase from the previous year. Cryptocurrency-enabled investment fraud losses totaled over $6.5 billion in 2024 alone. Let that sink in. And that's just reported losses. The real number is almost certainly higher because 30% of scam victims don't report to authorities. This isn't a bug. This is the system working exactly as it's designed. Complexity protects the fraudsters. Offshore accounts make assets untraceable. Regulatory agencies are underfunded and overwhelmed. Prosecutions happen years after the fraud starts, and victims almost never get their money back. Now add the new tools. AI-driven scams now account for more than half of digital financial fraud. Deepfake technology surged by 1,530% in the Asia-Pacific region from 2022 to 2023. Around 85% of global fraud involves synthetic identities, and AI is making these harder to detect every single day. Fraudsters use spelling manipulations to evade filters. They geo-restrict fake websites. They route traffic through VPNs. They buy specialized malware for as little as $50. And they remain undetected for a median of 12 months. And here's the kicker. 67% of people claim they can recognize a scam when they see one. Yet the losses keep growing. That confidence gap is a weapon. So what does this actually mean for someone with a mortgage, a 401k, and a paycheck that barely keeps up with inflation? It means the financial system you trust is far more fragile than you think. Your savings are likely held by institutions that rely on the same auditing firms, the same regulatory frameworks, the same offshore infrastructure that failed to catch Madoff, Enron, Lehman, and now BlackRock. When these frauds collapse, the losses don't just hit billionaires, they cascade. Pension funds get wiped out. Credit markets freeze. Companies lay off workers. The 2008 financial crisis cost 8.7 million Americans their jobs and caused trillions in lost home equity and retirement savings. Now consider what happens when the fraud is even harder to detect and AI-generated fake identities, deepfake voice cloning, synthetic invoices that pass audits. The gap between discovery and collapse is widening. The regulatory agencies, they're years behind. The SEC just created a crypto task force in 2025. Congress passed its first comprehensive federal crypto legislation in 2025. This is the first time the federal government has legislated on crypto. That's how far behind the curve they are. Meanwhile, $20 billion in crypto scams have already been stolen. And here's the part nobody wants to say out loud. The system benefits from this. Complexity creates opportunities for fees. Offshore accounts create opportunities for wealth concealment. Weak enforcement creates opportunities for fraud. The people running the system get paid whether the fraud is caught or not. So, if you know the pattern is real, what do you do with that knowledge? The trajectory we're on has three plausible paths. Path 1, escalation. The fraud gets bigger and faster. AI tools become mainstream for fraudsters. Trust in financial institutions collapses. Credit markets seize up. Your savings lose value. The system lurches from crisis to crisis, and ordinary people bear the cost every single time. Path 2, regulatory crackdown. Governments impose draconian regulations. Every transaction gets monitored. Privacy is sacrificed for security. The fraud slows down, but so does innovation. You're safer from fraud, but trapped in a system with less opportunity and more control. Path 3, fragmentation. Trust in centralized institutions erodes. Decentralized finance grows. The system fractures into smaller networks. You have more control, but also more risk. There's no bailout, no regulatory protection. Freedom and risk become inseparable. Which path are we heading toward? Probably some chaotic mix of all three. But here's what you can control. You can understand the pattern. You can stop assuming that credentials equal trustworthiness. You can stop assuming that complexity means legitimacy. You can ask questions. You can demand transparency. You can diversify not just your investments, but your trust. Spread your risk. Learn to recognize the warning signs. Pressure to act fast. Promises of guaranteed high returns. Vague paperwork. Unregistered operators. These are red flags. When you see them, walk away. And recognize this uncomfortable truth. The $500 billion scam nobody talks about isn't just BlackRock. It's the entire architecture of modern finance. It's a system built on trust that's too complex to audit, too opaque to understand, and too profitable to fix. Consumers lost $1 trillion to scams in 2024. Federal government loses up to $1 trillion a year to fraud. These aren't outliers. This is the baseline. So here's the reframe. The question isn't whether another massive fraud will happen. It's already happening. The question is whether you'll see it coming, whether you'll protect yourself, and whether you'll demand a system that actually works for people. Because the system isn't broken. It's working exactly as designed. The people at the top extract wealth. The people in the middle enforce the rules selectively. And the people at the bottom pay the price. That's not a bug. That's the feature. And until enough people understand that, the $500 billion scam will keep running. The names will change. The tactics will evolve. But the pattern will repeat. So what are you going to do with that knowledge? Are you going to assume it won't happen to you? Or are you going to start asking harder questions about where your money actually is? Who controls it? And what happens when the next scheme collapses? If this video gave you a new lens on what's actually happening, subscribe. Because the answers you need are rarely in the headlines. They're buried in the patterns most people ignore, and the uncomfortable truths most people would rather not face. But those truths are the only thing standing between you and the next $500 billion scam that nobody talks about until it's too late.